Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about IG Petrochemicals, which is in an upswing and over the last 1 year has produced magnificent results. So let's understand about the company and let's understand what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about IG Petrochem, here's small request that kindly support me on Patreon, and once you do that, it will help me grow the channel on YouTube, and it will help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, when you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk or a number of stocks you're holding, you can directly email me and we can work things out with a fee. And also, if you cannot join Patreon, you can join the YouTube membership as well. I have started with that from this month. Now, what the company established in 1992, IG Petrochem provides various chemical products and especially oil extractant chemical products. It has global reach. Phthalic anhydride is a major product of the company which is in greater demand globally. The market cap of the company has soared to nearly 2800 crores or even above that. It was around 12-1300 crores about 15-16 months back. If you look at the advantages for the company, then it is one of the lowest cost producer for phthalic anhydride globally, and that is why the company has been a leader in this space and is selling, probably having the greatest market share when you come to this product and selling of this product. The plant has been located or is located strategically at very viable points, so that the transportation cost is reduced substantially. And when we talk about transportation cost, then even fuel cost comes into it, so then their costs are reduced substantially and they can sell the product at greater margin. The clientele is extremely strong and has currently major clients, whatever client that you can talk about in this space. There's high capacity utilization going on for the last year and a half, between 85 to 90%, which is considered extremely high in this space. Normally the capacity utilization is around 60-70%, around that, which is considered good. And recovery processes is also good. So once things get done and new cycle begins for the production of phthalic anhydride, it takes lesser time for this company to produce that. So cyclically also time frame is extremely less and gestation period is less for the company, and that's why they are producing very good numbers. How has been the stock performance? It has surged more than 100%, as I mentioned, 120, 130% over the last 15 months, 18 months. Last 12 to 18 months has been extremely good for the market, and especially for chemical companies, it has been absolutely fabulous. And IG Petrochem is not far behind. And with petrol prices rising, with the oil and gas prices rising, I think companies into this space are going to benefit even further. Yes, there will be some effect of raw material cost, but overall the benefit for such kind of companies would be even greater. Currently it is trading at around 12 to 15 times earnings, and even forward earnings it would be around 11-12 times, which is very good considering the kind of valuations other chemical companies are trading at. So it is reasonably valued, and demand for its products have increased and is on the upswing at the moment. With economies opening up globally, the demand for products of IG Petrochem has increased. Numbers have improved sharply. In fact, sales and profitability has grown 40-50% CAGR over the last 2-3 years, and things have become even better post the shutdown and over this last financial year, or FY22. When you consider FY22, it looks like this is going to be one of the biggest years in terms of numbers for the company. Return ratios are pretty strong and promoter holding is good. So what is the current situation with the company's demand for phthalic anhydride has surged post March 2020, and we have seen that over the last 18 months the demand is only increasing with high production of the producer from this raw material. And some of the demand from China has also shifted, and that has been going on for the last 1.5 years. And now with China shutting down many plants, China being more stringent on pollution and other norms, and businesses, even online businesses, are being curtailed at the moment. So there is going to be a systemic shift towards India for most of the products, and phthalic anhydride will not be left behind, and that is the prime reason the stock has been surging, because it looks like it's going to be a permanent shift, and the numbers will continue to be very good compared to say last 5 6 years. Prices of their product has increased as well over the years, with over the last few months, with increased demand. And in the last 8 months, 9 months, over the last 1 year, the prices have surged between 5 to 600%, 500 to 600%, which is exceptional, and that is also leading to the you can say numbers on the bottom line increasing a lot. And it is said that the prices may come down, but it won't go down that much that will go back to the same levels say 2 years back. So that is a prime reason why people are looking to buy the stock even at these elevated levels. This growth looks sustainable for at least the next 2 to 3 years, and that is why investors are flocking to buy into the stock. So what needs to be done? In my opinion, it's a buy on declines. I won't say that you just jump in at these levels. Of course, it can very well go up, say around 20 to 30% from here, but the risk reward ratio is not quite favorable at these levels. So what you can do is, probably if you have around 1 lakh rupees to invest, you can put in 20,000, 25,000 at these levels. Wait for some kind of decline from any levels, some kind, say 10 to 15%, 12%, 13%, and then put in the next 25, 30,000, and then keep on doing that on any sort of declines that take place over 1 month, 2 months. The declines will happen, and these stocks will also give you opportunities, and then hold for around 2 3 years. You'll make decent amount of money in that, but I am not very sure that whether the money would be made from current levels. There could be some amount of trepidation that could be seen from these levels, and whatever your final average price be, keep a 20% stop loss from there. Don't take heavy losses, because you never know when the chemical cycle will turn around. It has been a 5 year bull market in the chemical stocks from 2016. So it would have to end somewhere, or at least stall somewhere for few months, and then you would be caught napping and lose a lot. So keep a 20% stop loss, and put less than 10% of your complete holding into such stocks. Keep track of raw material and product cost as well. If those costs increase, then also numbers would be hampered. So always be on your toes with respect to such kind of companies. So this was my video on IG Petrochem. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon or join me on YouTube with the join button. Thank you.